Hello and welcome to United States Chart Company online video trading lesson. I'm Jim Prince, aka Trader Jim, and I'm your host for these video sessions. This weekly instructional video is offered to all US Charts online subscribers absolutely free. Let's get started with today's session. Welcome to this week's trading lesson. This week I thought I'd talk about the term testing of support and resistance. Exactly what that is, what it means, and give some examples of it so you can see how it takes place in real time. So let's go ahead and get started. We'll look at several different charts here. Now, if you recall, I'm a big believer in support and resistance levels. I think they carry major impact in the markets, whether it be the commodity futures markets, the stock market, mutual funds, whatever it may be, because there are a lot of technical analysts out there and folks focus on these areas. Here's an example of what it means to test resistance, and then we will look at what it means to test support. Now, keep in mind that these areas of support and resistance are levels or zones. They aren't exactly met all the time. Sometimes prices fall just short of them. Other times they just extend past them just a little bit, and then we'll reverse their direction. So here we are, once again, looking at this chart of March corn. Number 1 point was formed right here. This was a contract high at this particular point in time at 393. Prices then retraced and put in these lows here to make this number 2 point. So you can see right here at 362. The market then rallied and it tested. In other words, it came up here and attempted to break above this number 1 point, but was turned away. That's called a test. Prices weren't able to break through, and even if they had gone through it a little bit and then turned over, that still would be considered a test. So that was a move up to resistance at this particular time, up to resistance at that particular time. Prices were turned away. They then came down and tested support here of the number 2 point. Why do I say test, even though it's obvious that prices broke below our horizontal line? Because again, it's a zone. They're not exact. This isn't, it's not rocket science, if you will. It's just an approximation of where prices will end up at. Either they come in a little short, as was the case here when the test of resistance was attempted, or they will extend just beyond it, as in this case when prices broke below support. After the fact, of course, you can see why this is a test, because prices then bounced and rallied, or were on the way to testing this resistance level again, but gapped right over it. This is something that happens quite often when markets are testing resistance or support levels for usually a third or fourth time. But when you have it here, this was the second time that it was trying to break through, and it did. It gapped over it and then moved higher. We are currently at a test of support because these highs now become a support level. Prices are coming down to this level. In fact, this particular day, which was the 24th of January, we had a low of 397.5, and again, our number 1 point here is 393. So we're about 4.5 cents above this level here. Today, as I'm doing this video here, this is on the 25th of January of 07, and you can see the market got down to 399, and that was a low, and then it bounced and ended up settling at 407. But we still, in this area, this is now considered a test of this level. Again, that they are rarely ever exact. Usually they will fall short or they will exceed it by a small amount. And if I scroll back on this chart, I think we can see some other examples. Here we have the 250 level right here. And look at this. Let me draw this line here on our chart. And you can see here the market came down, made this low right here at 248, then rallied for the next 2+ weeks here and got as high as 264.5 and then declined again. And prices then moved down to a low. Let's see what our low point here is. 251, 250.25. Looks like 250.25. And again, our low over here was 248. So we came within 2.25 cents of this low. So we tested that, bounced off of it, and rallied. Now we can scroll back here and look at this. If I move our line further back, this is really telling of how support and resistance work. Look at this. If I move our line further back here, this goes all the way back into December of 05. We had these price levels here. We had these lows here at 249, 249.25, right here in January of 06. We can scroll forward to the fall of 06, and we tested that again. So initially, if we go back here, we had all this price action right at this level. Look at that. All of these multiple tests right in here. The market rallied up, came back, tested it again about a month later, and then continued to move up. And as we scroll back to where we originally started here, you can see we have a test again months later. A test here in August and again in September, and that support level held. Strong support so far because it's bounced off it, and it's been multiple times. Not just 2 or 3 times did it hold, but it held multiple times. And within this same market, let's look at this. We have some resistance levels that were tested. We have these highs that are crossed here. There we go. We have highs here, hit at 296, hit here again, 295 and a quarter. Tested, almost a little over a month later at 295, right in that zone. And now let's do this. I extended this line over here. Look at this. This is in October. The market rallied up here, popped above our line, held below it for a couple of days, and then gapped above it, just like we saw in our other example. A gap over resistance again in this case, and then started to move higher. Again, the 50% level can also act as a zone. Markets will move towards them. The 50% level will act as support and resistance as well. And so we had the markets poke above the 50% level here, drop back, and then just rallied right off of that to go up here and form this number 1 point. Here's a chart of February gold, and I already have this flat top triangle marked on this in the chart book, and you can see that the top or the horizontal line of the flat top triangle has posed as resistance. And look at this. The market ran up here, it dropped down below this level, of course, below 650, ran up, stopped, fiddled around for months, ran up, tested just over 650 again, dropped back down, and looks like today we actually popped up above this here for a short bit of time. But again, resistance, resistance, resistance. The market goes up and tests out. Sometimes it won't only test it, but it'll fire right through it. This is why it's key to know where these support and resistance levels are on the chart, because they can be used as short-term targets or long-term targets, or even places to put your stop loss at, depending on your style of trading. But it's always good to know where support and resistance levels are at prior to going into a trade, because you could be buying right into a resistance level or selling right into a support level, and that makes it difficult, because if the market doesn't break through those levels, your trade is more than likely not going to be a profitable one. So keep an eye on these areas of support and resistance, and watch how the market tests these levels. And when the market not only tests it but breaks through it, that's when you have a potential for a move to the next higher level of resistance or to the next lower level of support. Well, that's this week's lesson. If you need any assistance, be sure you call one of our course counselors. They can be reached Monday through Friday from 8:30 to 5 Pacific Time at 541-955-2885. I'm Trader Jim. Have a great weekend.